What is happening? What's popping, guys? It's your boy EAK Frugality FX. We're gonna be analyzing NASDAQ today, and I'm gonna show you what I'm anticipating for the upcoming weeks on NASDAQ 100. So stay tuned. Let's get them peeps. What's popping? I like studying on my daily time frame, using my line chart just to get my accurate diagonal resistance. So I like at least two touches to confirm my trend line. So I'll start from here and take it from there. Because what we're seeing from here, we have first touch, second touch, and a possible third touch. Why do I say that? Because we are using a line chart, so that's possible a week. That's possibly a week on a daily time frame. There could be possibly a week right here, touching the line when we candlestick. Oh yeah, then you see it's a touch, a third touch. So with three touches, then it move up. So I want to show you guys how to check structure. How to check structure. So if we check on a daily time frame, Nasdaq was on a downtrend until this level when then we broke out of structure. Okay, Nasdaq in a downtrend until we broke out from this level right there. Anything above this level is an uptrend, right? Why am I saying that? Let me show you something because we're creating lower highs all the way, and the characteristic of a downtrend is lower highs and lower lows. Okay, so I'm gonna clone these just to show you exactly what I'm talking about. With a lower high here, with a lower high here, also hit a lower high here. It's a lower high created, and then also some lower low, with a lower low here, then also the lower low here, and of course the touch is considered a low as well. The trend started creating a higher low. The first sign that show that the trend is about to move up is the higher low, which was created right here. After creating a higher low, we then created a higher high. We then created a higher high. Okay, so now I'm gonna move to my smaller time frame, so H4 time frame. But before doing that, I'm gonna put my diagonal resisting trend line. So I'll just clone this trend line, then I'll just drag it and try to see I get the most touches, which is right there. And then I'll call this line structure break. Structure break. So that's where we broke the structure, right? That's the line's name, structure break. And what I would do now is to go into my H4 time frame, and that's where we're gonna start getting more details. So from the H4 time frame, you can see that the structure break is just actually a strong level of demand. It's a strong level of demand. Why do I say that? Because I see it's been touched multiple times, and the market been respecting that level multiple times. Okay, market been respecting this level multiple times. Okay, and one thing I noticed also we got out of our expanding channel. We got out of our expanding channel. So I can put my touches here. I can put my touches here. Put the trend, put the lines here. Suppose I put the support line. We realize that we broke out of expanding channel. Right? We broke out of expanding channel. So what the trend is currently doing, it was been trending up to a certain level of supply zone. So this is a major supply zone. This area right here is a major supply zone. We did not break it fully. I'll make it yellow. I'm gonna call it supply zone. What is that? supply zone. We have our supply zone right there. And then if I put my diagonal support and diagonal resistance, the market was trending in a rising channel. And what we know about rising channels is they are reversal patterns, right? Rising channels are reversal patterns. I'll make this a purple rising channel. And what you know about rising channels, they are reversal patterns. So you want to cater all the patterns. That's the only way you're going to get entries. Okay. So what the market is currently doing is we basically just forming a correction. We impulse to the upside. We did not retest our structure break. It's a level of demand, right? Level of demand. We need to test the demand zone. We did not test the demand zone. So from here, we should be coming back to this side. And from this side, we should be going to create new highs. Because we formed the uptrend, but the 90% rule, the nature's theory, for every support, for every breakout, there should be a retest or correction. And then we can also notice that it will probably form inverted head and shoulders. Our head right here, and our next fourth shoulder will be formed here, and it will impulse to the upside. Okay, that's on the H4 time frame, and it isn't in align. It does align with a sentiment based on the market breaking out of a buy zone to the sell zone. So if you put here, we have a small buy zone anywhere above this line. I'm gonna call it a BZ buy zone. The buy zone, and then anything below that is called a sell zone. So anything below this line is a sell zone. Anything above this line is a buy zone. And it also potentially create a double top and fall, because this is also a structure that we cannot unsee. We're at the top here. At the top here, we could potentially drop to the downside. Okay. But also the nature's theory, when you come to a supply zone, we need to respect it. And it's showing signs of exhaustion. So guess what? There's a 90% rule that the chance of the market dropping is very high. We need to retest the top side of the expanding channel because we shifted from a sell zone to a buy zone. Okay. Shifted from the sell zone to the buy zone, and it's also above the structure break, right? So anything below this line is the sell zone. Anything above is buy zone. That's the part of the confluence. And then if I pull my Fibonacci retracements on H4 time frame, let's see what's happening. Let's see what's happening with Fibonacci. It's an uptrend. So we'll put our 100 at the bottom. And we'll put our 0 at the top. And we are looking for that retracement, the 61.8 retracement level. Yep, we're looking for that 61.8 retracement before reaching new highs. Let me show you something about 61.8 retracement. 61.8 retracement level. Okay, the key we found is in the number series number follows. So that's for next time though. But 61.8 retracement is very important level on the Fibonacci retracement level. And then you get the negative 27 extensions and the negative 61.8. But that I can take from the daily time frame because those are extended levels. And it does align again with our trend. It will be then on the top side of this upward channel. The negative 61.8 is at 16,058. That's new highs. And negative 27 extension is at 15,742, which is the all-time highs. So NASDAQ is going for the highs. But before we go for the highs, we have to come back and retest and collect all these orders waiting here. These are order block, right? It's an order block. So there's a lot of orders waiting for to be fulfilled here before going to the upside. We're already seeing some signs of a double top formation, which is a sign of reversal, and then we're going upside. So that's my sentiment for next week and the upcoming next weeks, guys. It's your boy E signing out.